Hello and welcome to ETRise Top MSMEs conversation. Much has been said about MSMEs being the backbone of the Indian economy. Over 63 million MSMEs in India account for about 30% of India's GDP and 48% of exports. These numbers are much flaunted, but there is one big gap, and that's funding, access to finance, credit for business. Niti Aayog's discussion paper on digital banks out in November 2021 pegs this credit gap at rupees 25 trillion. How can we bridge it? How can MSMEs access finance for business growth? I'm Miloni Bhatt, and this is the question we hope to get an answer to through our guests here today on ETRise. We have with us Mr. Amit Bhatia of Deutsche Bank. He's the Managing Director and Head International Private Bank India. He has 25 years of consumer and business banking experience across banking and financial services. He's been in leadership roles for the last 16 years. Mr. Bhatia, thanks very much for your time.
Thank you, Miloni. Thank you for having me here.
Next, we have with us Rachna Bhusari, Vice President at the National Stock Exchange. She has been with the boards for 20 years. She is responsible for all India business development initiatives of the NSE for listing of all corporates on the boards. Rachna, thank you very much for your time today.
Thanks, Miloni, for having me on this session today.
And finally, we have with us Mr. Sachindra Nath, Executive Chairman and Managing Director, Ugrow Capital. His career spans 3 decades, and he has built insurance companies, an asset management company, and an NBFC. Mr. Sachindra Nath, thank you for your time today.
Thank you, Miloni. Good to be here.
I'd like to start with you, Mr. Amit Bhatia. In India, MSMEs tend to be informal in nature and relatively less aware of banking requirements and schemes. So how do we make information about financial services more accessible to MSMEs so that they can access credit for business growth?
So, Miloni, look, that has been true in the past, right? This is one sector, and you very well articulated that, very important sector from an Indian perspective. Not only in terms of what you outline, but also in terms of employment generation and growth. So, communication is one very, very important aspect. Whether it is outlining government policies, whether it is outlining or articulating what banks have to offer, and so on and so forth. So I guess what is very, very important is that each organization takes this up, this key component themselves, exactly like what we've done. Of course, apart from the very, very important forums that are there. Example is one of the ETRise forum that we are, right now part of, which helps in dissemination of information to more and more SMEs. But from an organization point of view, look at some of the things that we do, right? We keep upskilling and training our client relationship managers, right, on key policies and procedures or any changes that take place, from time to time, and especially now, because the environment is so volatile, right, and uncertain, right, and they keep disseminating this information more and more to their own clients. Similarly, from our perspective, we've tied up with CRISIL. We have a newsletter, a monthly newsletter, that goes to each and every business banking and commercial banking client of ours, right? Similarly, we've appointed a couple of consultants. We are going to, make this a proprietary event. We've already done this on many occasions, where they train our customers and some of our prospective clients as well, right, on changes, policies, procedures, documentations on trade, import-export finance, and so on and so forth. So it's an ongoing exercise. You've seen in the past, because of its importance, even a lot of fiscal measures, are directed towards this segment now. More and more, apart from the monetary, measures that took place because of the pandemic, a lot of fiscal measures in the last 4 or 5 years, the government has directed towards this segment. right? And it is very important for, at least the MSMEs to know actually, what is it that they can look up to. So information is the key, communication is the key as far as disseminating information is concerned. And I think it's on all of us now, and not only the government, but also all the organizations that work on the industry clusters, the sectoral clusters that have been built, right, to keep disseminating this information on a real-time basis. So very, very important, for people who are in this segment to know on a real-time basis what is happening.
Right. Mr. Shachindranath, I'd like to move to you now and, get straight into some of the things that have been proposed for your sector. The RBI proposed a co-lending model for priority sector lending. And your company has signed up with SBI. So how well has that worked out and what have been the challenges?
Yeah, I'll come back to that. But I think so. One of the things which you should remember that what we say is that we are trying to build India's largest small business financing platform. Our aspiration is to take 1% market share in next 4 years, and we have been good at that journey. Today, in last 2.5 years, we have serviced more than 15,000 plus customers. One of the big change which you are seeing, what we call there is a movement of collateral to cash flow when it comes to small business financing. Today, if you walk in as an individual, you walk into a Chroma store and you want to buy a fridge, you can buy it in 10 to 15 minutes just by your mobile number, your OTP, and then which fetches your bureau, and you can get a financing done. Whereas an SME, when he gets an order of 5 lakh rupees and he needs 3 lakh rupees of financing, it can take anywhere from 15 days to 3 months time. The reason why that has happened, because what we call pre-data era, which is the GST, the digital banking and the bureau, for any lender to estimate the real cash flow for an SME was very difficult. You go and ask him, what's your revenue? The revenue would not be in his balance sheet or not formal. You ask him, what's your expense? Most of the personal expenses would be loaded into the business, and the behavioral analysis was not there. That is dramatically changing. We believe that in next 2 years, the small business financing in India would reach to the level of consumer financing, which means at the point of the transaction itself, you'll be able to finance that. Today in Ugrow, we use what we call the data tripod of GST, banking and bureau, and provide credit disbursement in first 30 to 60 minutes of a case getting logged in. And you ask about then correlated to that, the co-lending. One of the problems, it is very well known that the non-bank finance company have been at the forefront of serving the underserved and unserved market, especially for MSME, which is a priority sector. But the challenge have been to get their own liability side. And that was solved first in November 2020 and then again in 2021, wherein RBI came up with this scheme wherein banks should co-lend along with the NBFCs. Now, this is a transition which is happening. We call it as an inflection point, wherein the entire lending industry would transform in a very different way. NBFCs would become lending as a service, and they have to collaborate very deeply, wherein the power of the capital. In India, people deposit their money only in banks because they feel that they are, safe places to park their money. So the capital power lies with the bank. The power to originate, find a good customer, underwrite, disburse, and collect is in the hands of fintech plus NBFC. So this marriage, once it comes to full power, would unleash the credit when combined with the data, propagation which is happening. And you'll be very pleased to know, not just with SBI, Ugrow has been at a forefront of this transformation of co-lending. We have partnership of 1,000 crore partnership with Bank of Baroda. We have 1,000 crore partnership with SBI, IDBI, and multiple banks we have. This has been a very painful journey, I must say, because you are trying to, make a large bank like State Bank of India and Bank of Baroda adapt to our unique way of, originating the credit, underwriting the credit. Today, we do roughly around 300 crore of business per month. We don't ask a single customer their balance sheet, income tax statement, or anything. We do at-point transaction-led financing. We take their GST, we take their banking, we take their bureau, and that creates the eligibility. And today, both SBI and Bank of Baroda has 100% adopted our credit model. It took us 1.5 years to get there, But once it has happened, you can think of that our challenge of finding money would in next 6 to 8 months would get completely, go away, because the capacity which large public sector and to some extent large private sector banks have would provide so much of credit availability once we continue doing our good business. But the co-lending would take time. I think so. The securitization market, which when it started in 1991, took almost 20 years to mature. But the co-lending would be at much fast, accelerated pace because the intent is there. MSME is the most important sector. Purely from political will perspective, 11 crore people are employed in MSME, which means 20 crore of lives, which means 20 crore of voting block. So governments are very keen to support this. The regulators are keen to support, and there is an intent of the banks to provide credit, not as a counterparty being NBFC, but the counterparty being the end client. And that's why this is working. This should work very fine.
Right. We'll come back to some of the points that you spoke of. Rachna, if I could move to you. NSE has an SME board where MSMEs can list. Eligibility criteria is lower than that on the main board. But what is the cost of the MSMEs listing on this board, on this particular board, and what does it offer to the promoters of these companies and also the investors?
Sure. Yeah. So Melanie, if you start with, the first question that comes is, what do I get out of it, and what is the cost that I have to pay for it? So I think your question addresses both the issues. So what do I get out of it is what I will start with initially. Most of the promoters, they enjoy higher visibility the moment you are a listed entity. If you see, we talk about 63 million, I would say, 6 crores of SME industry, SME companies, but out of them, who will qualify to be listed will be very few. And out of that, who have actually gone ahead and listed are extremely few. So, these people who have taken that leap and who have taken a plunge in the capital markets are the ones who enjoy higher visibility. The obvious benefit out of that arises. The second is, the better credibility amongst your stakeholders. If you're a listed company, everybody looks at you with a different perspective altogether. The banking terms, I'm sure Mr. Shachindranath and Mr. Amit Bhatia would agree that if they have a listed company coming to them for any product or any facility where they need capitals, the moment it's a listed entity, they enjoy a higher they enjoy better returns, and the comfort of these institutions to give money to a listed entity is much higher than being an unlisted entity. So again, those benefits are a galore. Benefits like, you can retain talent. Again, SMEs, they're unable to attract talent, and then even if they attract talent, they're not able to retain the talent. So once you're a listed entity, you can obviously have the most important tool, ESOPs, with you, wherein you can actually again retain the talent and attract the talent to your company. Unlocking the valuation, again, that's again a perspective that most of the promoters fail to recognize. I think the richest people in the world are not because of the assets that they own. It's because of the market capitalization of the investments or the shares that they are holding in their company. So I think that's one more important perspective that promoters have to understand, is unlocking the valuation is very, very important at a point of time. Being an unlisted company, they're actually deprived of their share certificates, are lying in one locker. They don't even know what is the value of it. So that's not what your actually worth of the company should be. Being unlisted helps you. Being listed helps you to move ahead, actually charter your growth plan with a lot of benefits in the capital markets. And we've seen a lot of people, investors, coming into this markets. The last 1 year has been really good. A lot of investors have joined the capital market, and for SME, what SMEs offer a different asset class for these investors, because they're able to actually join the growth story of the company at a very, very young stage. So that's a very important point, that there are investors who want to be into such stocks, which are starting young, which are starting slow. And if you look at the past data, most of these companies started as SMEs today, who are in the main board and who are in the Nifty 50s. They were all small companies at the beginning. So people can actually invest in such small growing companies at a very early start their journey, and then have the path of wealth creation. So that's with respect to what is in store for the promoters. Now, when it comes to cost to SME for listing on NSE is technically negligible is what I would say, because this is not a revenue model that any exchange would get into. This is more of facilitating the SMEs to chart their growth stories, have a platform which helps them raise funds. So at NSE, our cost is very, very minuscule. It's in thousands that I could say is what we charge as annual listing fee and something. But what attaches the cost to the company is not the exchange cost, I would say. It's about the cost of getting the due diligence done. It's cost about getting the structure in place so that you are becoming an eligible company to get it listed. But it's a kind of one-time investment that you do. It is again, it's a one-time investment that you do to raise funds, to infuse capital, and to add other benefits to your company by being in listed space.
But Rachna, tell me, are there challenges in getting promoters to understand these benefits? Simply because financial literacy when it comes to MSME may be really low, and the bulk of the MSMEs are really small. They're micro enterprises. So what would be the time frame like?
Yeah, the challenges are multiple. First challenge becomes with parting a equity. It's like it's their baby, asking them to hand over a portion of their baby to someone else to have investors on board. So I think the first challenge that comes is taking up decision to dilute their equity and share with some other partners, with some other shareholders. The second challenge, what I see, it's a mindset change. I think it's all about the SME entrepreneurs they have actually seeded the company, they've grown the company, so they are like the CFO, the CPO, the CTO, the CEO of the company. They are everything for the company. So for them to get into a structure where there's delegation, there is a CFO who's doing a particular job, it takes a lot of mindset change for them to adapt to organization structure that is required for a listed entity. I think third very important, and Shachindranath has touched upon this, is a mindset change about moving from a tax-oriented balance sheet to a wealth creation balance sheet. Because I think what is the first thing that comes to a promoter's mind is that if I show so much of revenue, and if I don't book so much of expenses, I will have to pay so much of income tax on my profit. But that's not going to help them in the long run. I have met numerous promoters having excellent business models, but their books don't show the revenue. And that is why they're not able to get the valuations that they deserve in the capital markets. So the mindset change to move towards a wealth-oriented wealth generation or a wealth creation balance sheet is, I think, of the prime most importance. Getting into delegation, identifying that you are meant for strategic purposes and there are people who will run the jobs at functional levels is, I think, second important thing. And fear of compliances. I will be I will be under scrutiny. I will have to share confidential information. My competitors may overtake me because I'm a listed entity. I can be taken over by any other larger company because I'm a listed entity. I think this fear of compliances, cost of compliance is very high. I will be only doing compliances. So I think these are the other challenges that you actually, this all about is involving engagement. The moment you engage more with them, you put them on to people who have taken this step forward, we're able to take this settle down with them and they take this leap of faith, I must say, and get into the capital markets.
So start to finish, what's the timeline like, or it must be different?
Again, it depends again on the mindset of the promoter, how his organization is structured. I have seen an IPO hitting within 100 days of the promoter taking the decision to come to capital markets. And I've also seen 1 year where the expiry was just due and they said, okay, come on, let's finish the IPO now. So there's nothing, this is not the time frame. There's no time frame fixed. But what I could tell you is one thing which is very important to understand for SME entrepreneurs is the regulators have taken immense effort to ensure that there are no hiccups in the regulatory framework which delays the IPO process. So in SME, the biggest advantage they have is that the exchanges will clear their offer documents. And the moment exchanges grant their in principle, they're ready to go and start their IPO. There's no SEBI observations that they have to wait for, which lengthens the time period for an IPO.
Right. Mr. Bhatia, I wanted to talk to you about the emergency credit line guarantee scheme, which was put in place by the government to lend a hand to MSMEs in the pandemic. What's been the offtake and the experience for you? And what are your thoughts on this sort of exposure of the bank to the MSMEs?
Look, this was a monetary measure which was introduced by the government and the regulator, primarily for the pandemic, right? It's a short-term measure. Our experience has been pretty good as far as Deutsche Bank is concerned. And what I gather from the street is, most of the banks and most of the customers have taken, full advantage of this scheme. If you ask us, many of the banks, there was this, you could decide whether to give an option of opt-in or opt-out. We at Deutsche Bank, we gave our customers an option only to opt out, right? So we were in the thick of things, right from the start. I think, given the fact that these are small companies, they typically, live on 3 to 6 months of cash flows. And in the first lockdown, if most of the companies and businesses were shuttered for about 6 months, right? There was bound to be pain, right? So I think this was a very, very good monetary measure or monetary measure that the government took. And not only, where there was a credit guarantee without collateral, which was given, you could go up to 20%, and then later on it was expanded as well, right? They've also increased the timeline because most of the companies and banks could not, partake this with all their clients or all the relevant clients that wanted it. So I think it's been a success, partly because, with those funds and typically with most of the small businesses, and Sachidanand mentioned this, mentioned this earlier, with collateral not being available, right? I think this was something which was very, very important measure, at least to, kickstart the MSMEs to come back to business. Now, given, the situation that we are in right now, keeping my fingers crossed, if this Omicron and all that, what we are hearing doesn't happen. I think if you see the data coming in for the last 3-4 months, at least the festive season was very strong, right? Even, the data that is coming in for December as well, though we've just started this month, it's a very, very strong number on all the key, parameters that the economy is measured on. So I think it's done its job, right? At least it's got businesses, back on its feet. They could, immediately arrange for working capital, open their businesses and start serving their clients. So, that's a good measure as far as banks were concerned also, because, from a bank point of view, to take a decision at that point, whether to lend more, when there was hardly any revenues or, hardly any change in their P&L, right? The change in P&L downwards, right? It was very difficult from a bank point of view or from an NBFC point of view to keep lending more without collateral.
Right.
So I think it enabled the banks also to do that and to serve their clients.
But there is also this real fear amongst the MSMEs that, once this kind of closes, again, access to credit from banks will become tough.
Look, Sachindra, mentioned this earlier. What was the issue? Let's go a little back to what was the issue in from an MSME point of view earlier, and why banks or NBFCs came in a little later,
yes.
But why banks did not lend to them. So there was issue on disclosures, diversification. You could see, MSMEs, being in, say, being a trader and then getting into becoming a builder and so on and so forth. And it was also about diversion, right? Diversion of funds, because typically in a MSME, again, Rachana alluded to that, there is their personal and company wealth is intertwined. Right? There is no segregation.
Right.
Right. So, these three were big factors at that point of time. CIBIL was also evolving, from a commercial bureau perspective. Right. But now, if you see the kind of data that you have, especially after demonetization and introduction of GST, there has been rapid sterilization of cash economy.
Right.
Right. So, what it has done is that, with APIs and with, fintechs coming in, you get real-time data on GST, on their income statements, on their IT returns, on all legal aspects, on all collateral details. Right. In the last 6 to 12 months, we've started getting details on that as well. Right. So there is a lot of information which is available now. Right. And more and more banks, if you see, are getting into this space. NBFCs, obviously, because they are more nimble-footed, they use technology far better. It's not as if banks don't use technology, but banks also have legacy systems, right?
Which can hold you back. Yeah.
Absolutely. So, so we are partnering with them, right? And we can reach out to customers that much more faster. So your credit cost is coming down, your operating cost is coming down, right? Earlier, if it was 2.5% across the banking sector or whatever, it's come down drastically now. So that fear of this segment getting lost, I think is now no more true, right? And you will only see more and more, lending which is directed towards MSME.
Right.
Because there's a lot of data and information which is available.
Mr. Sachindranath, linked to this, there were certain sectors to whom lending reduced during the pandemic. Sectors like hospitality, aviation, real estate. What's the scene right now? Has it picked up? And as an NBFC, are you wary of lending exposure to some of these sectors still?
Yeah. So actually, we are in deeply sector specialized micro to small MSME lender. We focus only on 8 sectors of the economy and 100 subsector underneath that. And when it comes to micro MSME, which is sub 15 lakh rupees loan, we are sector agnostic. So within our universe of sectors, airline industry doesn't come into MSME at all. So we don't touch. Real estate we don't take into account. While real estate has certain element of the ecosystem are small businesses, but we don't touch that. So we touch broader economy. So Ugrow focuses on education, hospitality, light engineering, electrical equipment manufacturing, auto component, chemicals, so on and so forth, and 100 subsectors around that. Within that, actually, because of our deep sector and special, so the way we think about this business in India, lending institution, SMEs are a non-homogeneous sector by nature. I keep saying this, that think of a large bank's credit officer going and meeting a dentist and then meeting an IVF clinic. And with both of them, he will ask the same question: how many OPD patients come to your shop? Because in his mind, they are both doctors, and higher is the number of OPD patient is better the revenue. Because they don't realize, or nobody has trained them to know, that the dentist may have higher number of OPD patient but less revenue. IVF clinic may have only 2 patients but 10 times revenue of the dentist. So this is what we call the non-homogeneous nature of SMEs and being underwritten in a homogeneous way. And that's what we call it the legacy underwriting methodology of the bank. And the only way you can overcome with that, then when you deeply specialize. So last decade or so, there is an emergence of multiple alternative lenders who focus either on a sector, who focus either on a geography, or who focus on a particular product. And that's the way they have been taking a large portion of the market share. And within that, once we specialize in sector, then what we do is that what we call the data. Because it has been presumed in the lending industry that when it comes to a small business customer, every customer is either good or bad as long as you meet the customer and make an assessment on the ground, which we say is not true. We have now the power of elimination through data, wherein bottom of the 20%, customer behaviorally who will default, you can eliminate just on this data footprint, and then you have to support it by the infrastructure. So if you look at during the pandemic, we did a mortality analysis. So we created a program called Sanjeevani. We disbursed almost 800 crore within the pandemic period itself. And the reason why we named it Sanjeevani, we said there has to be a medicine for revival of SME during pandemic period. And the way the mortality index works, so within the hospitality, we do 8 subsector. We do banquet hall and fast food chain. Our banquet hall and at a mortality rate of 120%, which means every banquet hall customer we presume would not survive. A fast food chain had a mortality rate of only 20%. And our predictive data analysis did a future cash flow that if the GST revenue is uptick, if the banking cash flow is uptick, multiplied by 4 times, and that create the eligibility of that. In a banquet hall, even if the revenue is going up, the eligibility would go down. So that is the way you combine your knowledge set, the power of the data, and then distribution, and start underwriting. So we have seen the highest amount of stress on education, which is the K-12 school, which we think will revive faster as soon as the physical schools would open up. And second, we've seen the highest amount of stress on hospitality, but it is not generalized. Anything in hospitality which had a fast, churning business and had an ability to move from physical infrastructure to digital and on delivery services actually started generating cash flow. But all the event management company, the banquet halls, the marriage halls and all that have actually seen a very severe stress. But beside that, I think some core manufacturing economy have revived very, very well, and people have been able to adjust. Actually, in some of the sectors, we are seeing the revenue and the margin expansion is much faster because there is a lot of cost savings happening. The travel costs, the physical office infrastructure costs, all of that has shrunk, and that's why there is a margin expansion which is happening now.
Mr. Shachendranath, you mentioned about schools, right? Education, especially. Now with this fear of Omicron and, this other thing that, kids have not yet started getting vaccinated. How is that playing out?
So the way you should think about when we say K-12 school as a small businesses, we are talking about, standalone school in tier 1, tier 2, tier 3 town. Most of these schools have 2 revenue components, what we call the core tuition fee and then non-tuition fee. The non-tuition fee revenue for schools is normally 60% and 40% is the core tuition fee. Whether pandemic or not pandemic, the core tuition element of fees has remained intact because education as a sector is that nobody withdraws student or kids out of the school at any point of time. That is the last thing which you do, even in worst time. When the non-core element of the fees, when your kids go to the school, the buses fee, the catering and all of that is actually got eliminated. And that's where actually the emergency credit line and kind of measures has helped quite a bit. If a school was paying a 10 lakh rupees of EMI, its capacity has come down to pay only 4 lakh rupees, which means then you can restructure the existing loan from a 3-year tenure to 6-year tenure, and his EMI come down to, from 10 lakh to 4 lakh, and then they are fine. And when you add little bit of, emergency credit line, that gives them the capacity to keep going on. So unless we have a massive shutdown happening, we don't think so that a school would deteriorate from where they are. But obviously the revival would become little difficult if a new virus has to hit our country very badly, which I hope is not the case.
Yeah, I think everyone hopes that the impact of that is extremely limited and we are able to contain it. Rachna, how has COVID impacted, the MSME segment when it's come to listing?
Yeah. So, Melanie, what we have seen is that prior to COVID, actually, 2019 onwards, we saw a dip in the SME companies approaching the capital markets for fundraisings. We saw very few IPOs. So 2016, 17, 18 were good years for IPOs for the SME companies as well. And 2019, it was like, we saw the main board also shrinking and the SME completely shrunk. So I would say the impact on the fundraising for SME started even prior to the pandemic. We completely saw very few companies coming out and multiple reasons out of that. But 2020, what happened is when the pandemic hit, actually, I think fundraising through IPO was not even their priority. It was first getting the top lines, ensuring that you are sustaining, you're remaining relevant in the business, and able to generate some of the revenues. Like I think Mr. Shachindranath said, is like economy, manufacturing companies typically after the pandemic have really picked up and done well, and we see that the main board is actually flourishing with a lot of IPOs, and then we see this trend being copied even in the SME. So again, SME has picked up and started doing well with respect to capital market fundraising. But one thing that we saw is that at least the companies that are listed on NSE, we have around 232 companies that got listed on NSE, and out of which around 98 companies have got migrated. So when the IPOs stopped on the NSE, or became fewer and fewer, we saw a lot of companies from the SME segment who had actually established well track records in the capital market starting migrating to the main board. So because this option that was available, that you could migrate to the main board, we saw that this last year 2020 and 21, we've seen a steep increase in the companies that have migrated. So what happened is that these companies performed well. They met the criteria that were required to migrate to the main board, and because the capital markets were doing well at the main board, these companies felt that it will be very encouraging for them to go out there as well, and they did that. What helps is that being one is maintaining your I think maintaining your status in the capital markets being I think adequate disclosure friendly company, so that don't non-compliances don't hit you, and second is doing your business in the right manner so that you are at least able to sustain during that time. And then various other avenues open up, and the moment the capital markets picked up, the moment the primary markets picked up for main board, we see, like today while I talk to you, 2 IPOs are going on the SME platform as well. So they're not left behind. So I think that's a great opportunity out there. It's just about tapping at the right moment and prioritizing at what point of time you need to get in where and what. I think banks were being very friendly with respect to offering the credits, and I think SMEs could take benefit. But the moment the markets improved, these people, they have the flexibility to immediately adapt themselves and put things in the right perspective at that point of time.
Right. Mr. Amit Bhatia, how can MSMEs assure banks of their viability in the post-pandemic world, where maybe profitability and turnover have fallen?
Well, only let's be realistic. Last 18 months, though, if you see the last 3 months, things have started looking up. But, prior to that, for about 12, 15 months, it was an extremely painful period for all the MSMEs. So being a realist, you're bound to see, financials which are, far worse than what they were earlier, right? So that's going to be a reality. But then, like I mentioned earlier, and Mr. Nath also mentioned, there is so much of data which is available, and there is, and so much of data on the company and alternate data on, sectors, industries, etc., which is available in public domain now, right? Which can be used, to gauge how a company is going to perform, in the coming period, right? And that is going to be one of the biggest engines for credit or for risk management to, actually take a decision on a client. That is one part of it. The other is, and slightly taking a contrarian view, apart from the data which is available, and like I said, there are credit engines and models which have been prepared on that. One aspect that we've seen, which has worked very well for us, and SME is a big part of our balance sheet in Deutsche Bank, right? So, is that, there is a lot of information that comes out on personal discussion with the promoter of the company, right? We make sure, depending on what level it is, if it's a 30 lakh loan, the client relationship manager and the credit manager spend at least face-to-face for an hour and a half, understanding what this company is exactly on the lines of what Mr. Nath mentioned, whether it's a dentist or a, IVF center, right? Exactly to differentiate, those kind of segments. So sectors within sectors or segments within segments. So, and typically if it's a 30 crore, 40 crore loan, even, I go and meet the client along with our risk head and so on and so forth. So a lot of information and a lot of data can be collected, by having these personal interactions with the client, right? And I think for some period at least, till the time, the next financial results come in, and then one after that, there will have to be a subjective element also involved into it. Not from a client perspective, not from an industry or sectoral perspective, but from a client perspective. You'll have to, organize or identify alternate means of identifying, where is the client headed, right? Apart from the fact that the client does give you the future projections and so on and so forth. So I think it's going to be a little difficult, a little different than what it was earlier, but we'll all sail through it, because this is an important sector. Everybody's been mentioning that, the government has taken fiscal measures. You look at, the e-marketplace or trades or, whatever it might be, it is all, directed towards this sector, right? And Rachan also alluded to, how that, it is, faster for an MSME to, or an SME to, go public than probably a bigger corporate and so on and so forth. So I think it's going to be a little different, but it will happen because, given the importance of this sector.
If I may just add very, very quickly, Amit, so that, we get the context right. So I think you are absolutely right that what we cannot, and that's where we differentiate from fintechs, this whole notion about that in India, you can run a lending business just digitally. We believe that's not possible. And that's why today we are increasing our physical infrastructure massively, right? Every month we are adding around 25 plus physical locations to go into tier 2, tier 3 town. But just to get the context right, there are three elements of, giving credit. One is, we say the eligibility. First is the intent, second is the eligibility, and third is the behavioral aspect of how much you do. That data decides. So you can, today you can look at from bureau and his past record. Eligibility you can create by looking at his GST plus banking. And on top of that, when our credit officers goes and meet the customer, we don't leave the subjectivity because they have to run what we call an expert scorecard. So if you go to a K-12 school, it is not just a discussion. They have to go and fill a questionnaire wherein they have to identify that how many times in last 1 year the school has missed paying teachers' salary on time. And there is a weightage attached to that. Because if a school is not paying teachers' salary in time, that's a negative credit filter and that's an alarm. So that is the way we look at, under it. So this whole differentiation, the whole non-homogeneity around non-homogeneous sector, you bring in a templated form and then disseminate the credit. Is that model we think is the breakthrough, in credit industry for MSME finance.
Right. Mr. Sachindranath, between NBFCs and banks, what should borrowers choose, or how do they go about making their choices when it comes to credit, when it comes to MSME?
Yeah, so, look, this is, I don't think so in India, small businesses have the choice to make because their credit is starved. Now, so I think so it is about them being able to get credit in time with what matters. And, that's why, obviously the cost of capital advantage is with the bank. So a bank may give a cost of credit which will be 300 basis points lower than what an NBFC would provide. But actually, he's not looking at that. He's looking to get his credit in time. Right? That's why he has to come to an NBFC. But this line is getting now merged, right? So I keep saying banks are becoming fintech, fintechs are becoming NBFCs, NBFCs are trying to become a bank. So this is all going around and around. And that's why we think so that the power of the capital of the bank and the power of access to I don't say reach because we don't have a reach of SBI. So that's misnomer. We have a method of origination and underwriting which is differentiated. And once you put these two together, then the choice for SME would be immense. Eventually, banks would start adopting. So if today, think of this, if Bank of Baroda has, actually I was on a call with almost 20 people in Bank of Baroda. And the kind of thing which they are developing by learning from all of the co-lending models is transformative. So with a public sector bank which enjoy cost of capital advantage, which is uncomparable, once they would go into these models and format, the credit would just simply expand and explode. It doesn't mean that NBFC won't survive, because they will still continue to do one step forward. We'll go to another set of market which otherwise banks would not be there.
Miloni, just to add another point, it's more about partnership, like what Mr. Nath mentioned. Typically NBFCs, fintechs are fleet-footed. They are faster. They use technology to their advantage. But banks have an advantage of capital, cost of deposit, and the regulatory environment, right? So it's more about not only about partnering, but also about learning from each other, and then doing what is best as far as clients is concerned. So I think it's going to be earlier, some 5-7 years ago, it used to be more competitive, that somebody is going to take somebody's space and so on and so forth. Like what you mentioned during the start, there is so much of space which is available, right? That for the next 5-10 years, instead of being too competitive with each other, it's more about joining hands and learning, and then probably reaching out to clients faster and serving them well.
Right, and here's to collaboration, and collaboration that benefits the MSME segment, and that finally that benefits our country. But Mr. Bhatia, yes, Rachna.
Yeah, if I can come in here, just because we were talking about collaboration, one important point is with Mr. Sachindranath and Amit Bhatia is that one thing which SMEs forget is the fact that banking and other lending is also complementary with equity, because the moment you have only debt is also a concern, but the moment you have a right balance between debt and equity, you're complementing each other. So it is actually equity and debt, they complement each other. The more equity, the more debt infusion you are able to get. So I think that's about collaboration is across the equities, across the debt when it comes to SMEs getting funds.
Yes, Rachna, I think important point. Thank you very much for that. And, for all of you, thank you very much for your thoughts and suggestions. For MSMEs who are watching this, there is a lot to mull over and implement finance strategies that work for them. Thank you very much for your time. Rachna Bhusari, Vice President of NSC, Amit Bhatia, Deutsche Bank's Managing Director and Head of International Private Bank in India, and Mr. Sachindranath, Executive Chairman and Managing Director, Ugrow Capital. Thank you very much.
Thank you. Thank you so much.
Thank you for having us here, Miloni. Always a pleasure.
Thank you.